Thank you for joining us for our webinar today as we cover COVID-19 legislative and lending updates. My name is Lee Schwartz, and I'm with SVA Certified Public Accountants. I'd like to let you know that due to the large attendance on this webinar, we are not offering live Q&A, but we have reviewed the questions you submitted ahead of time, and we'll be sure to address them throughout the presentation. We've also provided the contact information for the presenters in the PowerPoint. I also want to make it very clear, if you have questions coming out of this webinar, your best bet may be to go to your existing lending institution or CPA. They know you best. But if that doesn't work, please feel free to reach out to me directly. We understand this is an incredibly difficult time for all of you. And if there's some guidance or advice, or even just a second opinion that'll help you in this process, we're happy to do it. The more we all help each other at this time, the stronger we'll all be on the other side of this thing. With that out of the way, we are recording this webinar today. You will receive an email with a link to a survey, as well as our SVA resource page where the webinar recording will be available. Our presenters today are Eric Trost, Dan Glomsky, and Nancy Melberg, all principals from SVA Certified Public Accountants, and Christy Brereton, Vice President of Commercial Banking from Johnson Financial Group. All of our speakers have been working diligently to make sure they're sharing the most up-to-date information possible, but please keep in mind that information is changing quickly. Having said that, I'd like to kick it off to Eric Trost.
Thank you, Lee. Your enunciation is impeccable. Anyway, we're going to get started today with some rules that we talked about last week. I want to go over a couple of those regarding what the IRS is issuing for extensions, some guidance for extensions. And then we're going to go from there to some tax updates, and Dan's going to talk about those that were issued in this legislation. And we're going to close with a good session on the SBA loan application and procedures. So we'll start with the extended tax filing due dates. For those of you that were on last week, this is a bit of a repeat. For those of you that weren't, you've probably heard this already, but the April 15th deadline is no more for this year. That April 15th deadline is now July 15th. So who does that apply to? It applies to individual tax returns, and it applies to corporations, C corporations, that had a calendar year end. So those normal due dates of April 15th are now July 15th, and that includes not just filing your tax return, but it also includes any balance that would be due with your tax return, and it includes first quarter estimates. If you have to pay a first quarter estimate, normally that's due April 15th, that's now due July 15th. There's some old guidance on there regarding you could only do this if you owed under a certain amount. There's no limit on that anymore. That was updated with guidance last week. Wisconsin also announced they're following this guidance. So this isn't just for the federal forms, this is also for Wisconsin forms. Now every state has to do their own update and decide if they're going to comply with this new July 15th deadline. So what we've got on this slide is one of the many resources that are out on the internet that talk about what the states are doing for if they're updating their due date to 7/15 or not. And that link right there should get you to the AICPA website for that. Moving on. Thank you. The IRS also released some more guidance on this, and this is since last week. Just talking about who this applies to. This extension applies to basically everyone. But note that if you're a partnership or an S corporation, your due date was actually 3/15, so you don't get that extension. But of note, if you file those late, there's a penalty associated with it, and that penalty can be abated or relieved if you give reasonable cause. So we probably have a reasonable cause. What this extension doesn't apply to right now is Form 990T, which is a not-for-profit form, and it also doesn't apply to payroll taxes, excise taxes, or estates, but it does apply to gift tax returns. If you can't get your tax return information together and filed by July 15th, There's also an extension to October 15th, just like it has been in the past. Some more guidance that was issued with that in the next slide is there is also an extension for the IRA contributions, HSA contributions, and MSA contributions. That date used to be April 15th. So if you wanted to make an IRA contribution or a health savings account contribution or a medical savings account contribution for the year 19, you had until April 15th of 2020 to make that contribution. Now that date's been extended through July 15th of 2020. One final note, Wisconsin EdVest, which allows you to make a contribution for 2019 by April 15th of 2020, that date hasn't been extended, so that's still out there. I'm now going to turn it over to Dan, who's going to talk more about the tax laws that were changed with this latest CARES Act.
Thanks, Eric. Yes, so what I want to talk about is the bill, COVID, Coronavirus Aid, Relief and Economic Securities Act, now referred to as the CARES Act. The president signed this into law last Friday in the afternoon. The bill is approximately 880 pages long and contains a lot of stuff, even more than what we're going to cover today in our short webinar. The price tag for this bill is approximately 2.2 trillion, the biggest bill that we've ever seen. And as part of this bill, we're going to highlight Title I and Title II of the bill. The other three sections, 3, 4, and 5, really relate to the fighting of the coronavirus. So the Title I is Keeping America Workers Paid and Employed Act. Primarily relates to the Paycheck Protection Program, or the SBA PPP loan, which is getting a lot of attention at the current time. Nancy's going to spend a lot of time on that, so I don't want to spend much on that other than to let you know that that's part of this bill. What I am going to spend my time on is the Title II, which is the assistance of the American workers, family, and businesses. As part of this section of the bill, they connected or addressed the fact that over 3.3 million individuals are applying for unemployment, and to try to make that sustainable for the economy, have extended some benefits. One of the extensions is to expand the number of weeks that an individual is eligible for unemployment to a total of 39 weeks. Some states like Wisconsin have 26 weeks as their normal, so this extends it another 13. It also now includes self-employed individuals. They remove the waiting period, so if somebody's eligible for unemployment day one, and they increase the weekly amount. It could go up as much as $600 per week. The one thing we got to watch on this front is that states must opt into this additional amount. The reason that is the states are likely going to have to repay the federal government for the cash advances to benefit these unemployed workers. It also should be noted that if an individual is teleworking with pay, receiving sick pay or other benefits, they would not qualify for unemployment. The other thing that was part of this bill is the rebate checks. The rebate checks are not necessarily in the mail, but are close. The IRS recently released that within about 3 weeks, individuals that have filed electronically and that have provided bank information on their tax return are likely to start to see those funds in their bank account within about 3 weeks. The amount of the check will vary, but it'll be based on either your 2019 or your 2018 tax return, as that's all the information the IRS has at the current time. If you haven't filed your 2019 tax return, the 2018 tax return would be used to calculate the amount. The amounts start at $1,200 for single and $2,400 for married, plus an additional $500 for each qualifying child, which generally speaking means a dependent that is under the age of 17. There is a phase-out amount that is applied to the rebates. And if you're single and over 75,000 in income, any dollars over that amount times 5% would be the reduction in your credit. If you receive a refund of $2,000 based on your 2019 tax return, but then when you go to file your 2020 tax return, the credit should have been $2,400. You will receive an additional credit on the 2020 tax return, as the tax return, the 2020 tax return is technically where this credit is calculated. At this time, we do not believe the alternative would work, meaning that if I received $2,400 and I should have only received $2,000, that I would have to pay the $400 back. Additionally, the IRS increased some flexibility with respect to individuals in the retirement plans. The retirement plan, individuals have an opportunity to take a withdrawal up to $100,000 if they are adversely affected by the COVID-19 virus. If they take this withdrawal, they are able to waive the 10% early withdrawal penalty if they're under age 59 and a half. They are able to potentially repay that withdrawal over time, or they can spread the tax responsibility of that withdrawal over 2021, 22, and 23. So I think that gives some people some opportunities to move some cash flow around. They also have temporarily suspended the required minimum distributions. This allows individuals that maybe don't want to pull their money out of the stock market at this time, that they're able to keep that in there. And finally, individuals that want to take or need to take a loan from a retirement plan, the IRS increased the limit to $100,000, which was originally $50,000. Additionally, the IRS made a few changes for the charitable deductions, trying to increase the ability for people to make a deduction and maybe change their mindset a little bit in doing so, giving them a minor $300 above the line deduction for individuals and increase the deductibility for corporations. A benefit they're offering also is the ability for a company to pay an employee's student loans up to $5,250. They are able to pay this loan directly to the financial institution or the employee, and that amount of that loan payment would not be taxable for the employee, but is deductible by the company. Moving on to the tax credits, and this is really our opportunity to try to help subsidize the program to keep employees on the payroll. One opportunity we have here is the payroll tax credit equal to 50% of qualified wages, including health insurance, up to $10,000 per employee. So a maximum of $5,000 per employee credit. Criteria here is, though, that in order for you to claim that credit during any quarter, you either A, have to be fully or partially suspended by order of the government, or you have to have a gross receipts reduction of less than 50% of the same quarter in the prior year. So obviously right now we have a government order that is a stay-home order, so we're meeting that. The problem is some of our opportunities to take other credits, like the Family First credit, or as Nancy will talk about, the SBA PPP loan. If you take that loan and receive the forgiveness, you would not be eligible to take this $5,000 credit on those particular wages. So no double dipping. Another opportunity we have to adjust cash flow here is the ability to defer some payroll taxes. Any payroll taxes from March 27th, 2020 to January 1st, 2021, you are able to take the 6.2% Social Security tax and defer that to 2 points in time. So take it for the full course of the balance of the year. And the first 50% would be due December 31st, 2021. And the second 50% would be due December 31st, 2022. Again, note that if I'm using wages or payroll taxes for the SBA PPP loan forgiveness, and I receive the forgiveness, I'm not able to use this deferral as well. Finally, some quick other opportunities for individuals and businesses to get some cash flow back. The IRS expanded the net operating losses for 2018, 2019, and 2020. Originally, it was limited to 80% of your income. Now you're able to offset 100% of your income in those particular years. So for example, if I was receiving, if I had income in, let's say, $100,000 in 1 year, and I had net operating losses of 100,000, I would be able to have no taxable income. The other benefit here that is a really good opportunity is the ability to carry back net operating losses back 5 years. So if you had a net operating loss that originated in 2018, 2019, or 2020, you are able to now carry that back 5 years. This does two things. One is it increases your ability to have access to cash, and two, potentially allows you to offset income in years where our tax rate was higher. Remember, the corporate tax rate at one point in time was 35%. Next is the ability to take some business interest expense allowance. In the 2018 tax bill, they limited the amount of interest expense that a business could claim to 30% of modified gross income. That limitation has been increased now to 50%, which should free up some available deductions and could potentially create a net operating loss that allows you to carry back some cash flow. And the final technical correction, there was one made on qualified improvement property. This allows you to classify improvement property such as like a leasehold improvement and those types of additions, classify them as a 15-year property, which makes them bonus eligible and allows for an immediate write-off in those respective years. That technical correction goes back to 2018. So you can go and amend 2018 and 19, claim some additional depreciation. And again, if you create a net operating loss, we can carry that back 5 years and see if we can generate some additional cash flow. So that's all I have for you. I'll pass it off to Nancy to talk about the SBA PPP loan.
Thanks, Dan. Some great information there. So now what I want to spend the next several minutes talking about is some really good opportunities that the SBA is offering for employers. Before we get into this, there's a couple things that I just want to clarify, because I'm getting a lot of people asking this. I'm hearing, this is too good to be true? There's a catch. I really think that what the government is trying to do is they're trying to put cash back in the hands of employees and small businesses to help our economy. As everyone knows, there's a lot of angst right now going on. People are not spending money, they're staying in their houses. We don't want this to lead to an economic crisis. So they're trying to put cash in the hands of employees as quickly as they can. So I think there's a really, really good opportunities for people to take a look at these loans that I'm going to go through in a little bit more detail. I also want to clarify that because these loans are so new and we are learning about them at the same time the SBA lenders are learning about them, and there's still clarification that needs to be made on these. So we don't have all the answers right now. We are trying as hard as we can. We have looked at the 880-page bill and are getting as much information as we can, but I will point out where there's areas that need some clarification. One of those areas right off the bat is these two loans that I'm going to talk about, the EIDL loan and the PPP that Dan mentioned, is we're hearing that you cannot apply for both loans. Our interpretation of that is that it's possible you cannot accept both loans. We have been telling clients early on to apply for the EIDL loan because that was the only one available at the time. So I don't necessarily think applying for that loan is going to hurt someone and disqualify them for applying for the PPP loan. And we've also heard that it's possible you might be able to use that loan to pay this loan off. So that's one of these areas that is going to need some clarification as we go a little bit further into this process. So on this first slide here, we have the link to apply for the EIDL loan. This is the only loan you can apply for on this particular website. This loan is given directly by the SBA. So now let's talk a little bit about the Economic Injury Disaster Loan, or also called the EIDL. So this loan is available to small businesses and nonprofits. So small businesses, the SBA is defining as, they're looking at the NAICS code, and they're defining that based on the industry and based on revenue and employee size. So it's not going to be as clear cut as the PPP loan that I'm going to talk about. Businesses must be located in a declared disaster loan, which Wisconsin has already been declared a disaster loan, and they have declared that, actually making it retroactive to January. As I said earlier, these loans are administered directly by the SBA through the SBA website. So you cannot go to a bank and ask them to fill out an application for this particular loan. The loans are available immediately. A typical SBA loan can take a few months to actually go through the application process. For this economic injury disaster loan, they're saying that they're going to try to get the loans approved within 10 days. And I'm going to talk a little bit more about some immediate relief with this loan as well. These loans are based entirely on credit scores. So they're really based on what is your ability to pay back this loan. And this actually brings up a really, really big, important point that I want everybody to listen to, is that this loan is not forgivable. It is not like the PPP loan. This loan has payback terms, which I'm going to go through, but it is not a loan that will be forgiven. These loans can also be used for any working capital. You can use these loans to pay payroll, accounts payable, bills that are coming in, rent payments, really anything that you might need to keep your operations going during this crisis right now. So let's go into a little bit more of the details on this particular loan. So the maximum loan amount on this loan is $2 million. Now, I want to point out that this is not determined by the borrower. The loan amount is determined by the SBA, and it's based on a gross profit calculation. It's based on your industry and a gross profit calculation. So you don't fill out the application and say, I want a $100,000 loan. They will come back to you and they will tell you how much you qualify for the loan. It's a very simple application online, and it's going to ask you for your gross revenue and your cost of goods sold, and then it's going to use that in the calculation. The interest rate on this particular loan is 3.75% for businesses and 2.75% for nonprofits. It is a 30-year term loan, and there's a 12-month deferral on the payments. So I mentioned earlier that there is some advance that they can give. As you're filling out the application on the website, there is a box that you can check that asks for an immediate advance on the loan. If you check this box, the SBA is claiming that they will give you that $10,000 within 3 days. It actually asks for your bank routing information and your bank account number. They're going to put that money in the bank right away. Now, the one thing that I want to point out as I talk about this is there's still some clarification on if you can apply for or if you can accept both loans. If you accept this $10,000, it's possible you are accepting this loan. Even if the loan is declined, the $10,000 becomes a grant and you don't have to pay it back. But I really believe that these loans are going to be accepted by, I think a lot of the companies are going to get this loan. I don't think that they're going to be declining a lot of people these loans. So just keep that in mind when it comes to that $10,000 advance. So loans less than $200,000, you do not have to have a personal guarantee on these loans. Anything over $200,000, they will require a personal guarantee. Also, as far as collateral, any loan that they're giving you more than $25,000, they will require collateral on it. However, the SBA has said that they will not decline a loan on a lack of collateral, but they're going to accept a pledge from the borrower, a general security interest in the business, which basically means that they're going to look at equipment, inventory. They're going to look at your ability to repay this loan back. So, and they also will accept property as collateral, real estate as collateral. So don't let that be the hang up on this particular loan. Also, I want to point out that there are no prepayment penalties for this loan. So really, for this loan, the only information you need to have available when you're filling it in online is you need your gross revenue, you need your direct costs or cost of goods sold, because that's going to determine your gross profit, and then they're going to come back and tell you how much you're entitled to. So that's really everything on the EIDL loan. So now what I'd like to move to is I'd like to move to probably the most anticipated part of this webinar is the Paycheck Protection Loan. So the Paycheck Protection Loan is a forgivable loan, and we are going to go through what that means and how to qualify for that loan forgiveness. Generally, the loan is available to companies and nonprofits with less than 500 employees. However, there are some exceptions to this rule. The exceptions are if you are restaurants or you have multiple locations, then that 500 employee rule is not going to be applicable. So we can talk to anybody more specific offline about that, but in general, it's 500 employees, less than 500 employees. The loan is also available to sole proprietors and independent contractors, and it's going to be based on your self-employment income. So these loans, very different from the EIDL loan, these loans are available through a lending institute. So it's going to be your bank or if you have an existing SBA lender. So these are going through financial institutes. Now, as of right now, this minute, our understanding is that these loan applications are not available quite yet. We're thinking possibly by the end of the week, but as of this minute, we don't think that these applications are available because they are going through lending institutes and they have to be ready for these. The maximum loan amount on these loans is $10 million. And that is calculated based on a 12-month, so payroll costs for 12 months in average, and it's going to be looking back at the 1 year prior to the loan. So if you took out a loan on 4/1, you're going to be looking at 4/1/2019 to 3/31/2020. And it's going to take gross wages for each employee, W-2 wages. It's going to take vacation pay, family medical leave. Now, state and local taxes, really, we don't have local taxes here, so it's going to be your state unemployment. So you do not add in this calculation Social Security and Medicare tax or FUTA. The average of that, and then you're going to multiply that average by 2.5. So that is your total payroll costs for a year, average times 2.5. Now, I also want to point out that you also have to exclude any individual salaries over $100,000. So if you have somebody that's got $150,000 salary, you're going to exclude $50,000 from this calculation. You can also add in this calculation health benefits and retirement benefits. So it's the employer portion of the retirement plan benefit. This is not the employee deferral portion because you're taking that in the gross wage. This is the employer deferral of that. So again, payroll tax, compensation, which could be commission, health insurance benefits, retirement plan benefits, and any salaries excluded over 100,000, and then add your UC tax. That amount averaged out for a year times 2.5% or 2.5. That will be your total maximum loan amount. Next slide, please. So for this particular loan, there is no personal guarantee or collateral required. They are waiving this in this loan. So this is really, really important to people. I know a lot of people right now in these hard times don't want to be signing any personal guarantees for anything. None needed for this. Part of this reason is because this loan is going to be hopefully forgiven, and I'm going to talk about that. So the loan forgiveness portion is based on an 8-week covered payroll. You can also include in that mortgage interest payments, rent, and utilities. So what you're going to do is you're going to look at an 8-week period from the time the loan is made, and you're going to take those total payroll costs. You're going to add in interest payments on a mortgage payment, rent, and utilities. And that is going to be the base amount of the loan forgiveness. Now, there is some criteria for that loan being forgiven. And there will be a calculation, but just a very, very simple way to explain this is it's going to be if there's a reduction in your FTEs. So let's say you had 10 FTEs and now you have 9 FTEs. So they're going to take that percentage of reduction and that's going to be reduced from the loan forgiveness. It's also going to be reduced if there's any individual employees' wages that have been reduced more than 25%. Now, something that's very, very important in this is that if you have reduced employees' wages, you've applied for the loan, what you want to do is you want to get those employees back on right away. And then they're going to look at that next 8-week covered period. So it's really based on you maintaining a normal payroll during this covered period. Now, if you've already, well, nobody's applied for the loan yet, but let's say you applied for the loan next week, you had employees reduced, but if you bring those employees back on by June 30th, then it's not going to take this reduction of the loan forgiveness. So again, this can be a little bit more complicated, but the thing to understand about this is the whole idea behind this particular loan is to pay your employees. Keep your employees on the payroll, continue to pay their benefits, and if you do that, this loan will be forgiven. So we're having a lot of conversations with people right now and saying, okay, let's start to get this information together. So even though the loans are not available at this point in time, you can start gathering this information. So really what you want to do is you want to start getting together all of your payroll from maybe April 1st, 2019 until March 31st, 2020. So you're going to probably need payroll tax reports. You're going to need to start pulling insurance information together, retirement plans. So all that information is stuff that we think you're going to need in this application process. And by the way, the SBA will be waiving these fees for this loan. So I think now what we're going to do is I think we're going to talk a little bit about some of the lending considerations that you want to have going forward.
Hi, this is Christy Brereton. I know they put the banker at the end. The accountants talk first, so if everybody's not awake, now's time to check in. So I've been with Johnson Financial Group for about 18 years. If you do the math, that's long enough to have gone through one round of this is never going to happen kind of events. And so, you know, going through what we're going through right now and having conversations with our clients, I have some ease with how to start the conversation and move through. And I just wanted to take this opportunity to share that with you. I think that's where I fit on this panel. And I'd like to just start with, you know, we've got accountants on the phone here, and they are, you know, one of your financial advisors, right? Your lender or your banker. Some of you on the phone have not had to borrow. So this idea of borrowing to keep your business going is new. You have a counsel, an attorney that's going to advise you, your insurance agent, et cetera, et cetera. Each of us has something we're keying in on for all of our clients that really matters to us and our area of expertise. So if you speak solely to your attorney about what should I do next, or solely to your accountant about what to do next, you will not have the benefit of that advisory team. So just wanted to call out front that each of us has a role to play. Each of us is keyed in on our piece of the puzzle, and use us as a team as you go forward, and maybe kind of establish a communication regimen where you're keeping however many of these players are in the works for you, as there's multiple types of sizes of businesses on the line here, that we're all on the same page for you. And then next, I just, the phone rings and the emails are coming, and they typically are something along the lines of, how do I get that $2 million? Or how do I apply for that $10 million? And the person on the other end of the phone at the bank is either doesn't have any idea how your 2019 was, where you ended the year, how the first couple months of the year, what your situation is, whether you aren't seeing clients or your business is at a 10% of what it was at the end of 2019, or if you're working but your accounts receivable are slow. So the first thing you want to think about is, if you pick up the phone and just say, how do I get money? Your banker isn't going to know what stage of the game you're in. So think about being able to articulate, we are already in crisis, or we can see that we're going to have a need by April 15, or we're going to be okay, we just want to be prepared. You know, what are you doing? Share with them what you're doing to limit expenditures and, you know, and things of that nature. Have you talked to your landlord about, you know, any rent concessions that might be available to try to just stop the flow out? And then really, you know, what % of revenue you see as possible, and any kind of financial cash projections that you can provide. You know, if you have the information available, we can best be prepared to solve for today's solution, and then also work with you as you move into, you know, or I've already applied for the EIDL, I'm waiting to hear, but I need a deferral, or I am going to do the PPP loan, but that's not available today. What can I do today to get the ball rolling? You know, so, you know, think about what those likely scenarios might be for you, to kind of paint the picture, tell us what you're thinking, ask those questions, and then really truly understand what you're reading in the press kind of looks like a one-size-fits-all, but it really isn't that way. And if you're having these good conversations with your lender or with your banker, they're going to be able to, you know, kind of work through, what does the solution look like for me? I've done just enough SBA lending and liquidated SBA loans to tell you that you need to do it right on the front end, and you need to be prepared to do it right on the back end on the debt forgiveness side. So, and those are things that your banker, if you're doing the PPP loan, has limited control over. It's SBA's rules, not ours. They're going to want it their way and their way only. And we don't have the SOP changes. So until the SOP changes, the standard operating procedure changes are known, we're not going to be able to tell you these are the things that they want from you to document this information for the front end. And until they tell us what they want to see on the back end, I think I've seen some guidance on it, but until I see it in their format, I'm not going to be confident that I can tell you what they're going to want to see on the back end on the forgiveness side. So understand that your banker is going to be at the mercy of however they want to accept it. It might not be the way that you've normally done it, and be prepared to be flexible and do the work. So there's that. The last point I would make on whatever path you choose to follow here is understand what your core beliefs were before you started and try to stick to that. If you're a debt-adverse individual, glomming onto every type of loan facility could keep you up at night. So understand, how is that going to work for me if the worst happens? That all of it's not forgiven and I have to do something, and business doesn't return to 100%, but it's 60%. And just, if you stick with your core values of how you've always operated your business, I think that's going to suit you well as you move through. So, again, kind of continuing on that thought, a lot of times we talk about strategic planning and our strategic vision for our business as we're growing and expanding and doing something. I feel that today, understanding how you retain the mission, vision, values can really guide you through, or actually show you where your weak spots are and how you might want to modify those to, see what you see for the future of your company, and to talk to your advisors about any changes to those core values that you want to implement. And then I guess lastly, as I'm thinking about it, you're going to be assessing where you are today, and you're going to assess how things are going day by day or week by week as your end user has changes to their plans, as new information becomes available about shelter, safer at home, et cetera. And as I mentioned at the beginning, having some sort of communication vehicle that you can easily share the information with everybody that needs to know it may suit you well, because I don't think this is going to be a sprint for everybody to have a check in their hand. I think it is going to be a little bit of a, it's going to be that 400. It's going to take us some time. It is going to be a flood of applications and things that way. So implement a mechanism for people to stay informed along the way. And then this isn't in my slides, but I was just thinking about a couple of the points that were in Nancy's slides. So because the applications for the PPP are an application to your lender, that is that's a piece that we can start the discussion today and be ready to get the right forms, if you will. But I think you can get a long way down the line in determining what you think your need is going to be, which one of these programs you want to utilize, what you might need to do in addition to applying for a PPP loan, if there is going to be any kind of a delay, meaning expanding a working capital line if it's available, or deferrals, et cetera, while you're waiting for that funding to come through. We don't want to have a bunch of defaulted loans on our books either. So understanding, the timing and the need process, I think will really be helpful. So I guess I wouldn't wait. When the forms are available and that mechanism is available, your banker will be ready to go.
So this is Nancy again. One thing that I realized that I didn't mention when I was talking about the PPP loan is the portion of the loan that is not forgivable, that will have a maximum maturity of 10 years. It will carry a 4% interest, and there is no prepayment penalty on that piece. Also, it looks like there's going to be a 6-month deferral with the possibility of a 1-year maximum deferral on those payments. So I just wanted to point that out, as I see I failed to mention that earlier.
Okay, I want to thank Eric, Dan, Nancy, and Christy for all the information you all shared. We have wrapped up a little bit early, so we are going to take a few minutes and do some Q&A. Many of you have been sending in questions via the chat function, and forgive us, we've already gotten many questions. So we will jump right in. And panelists, I'm just going to have you, if this is an area of focus for you, please jump in and feel free to answer. I'm going to throw some questions out. One of the ones we received was, does any business qualify for the PPP loan, whether or not they're profitable before or after COVID or not?
I haven't seen any guidance on whether profitability is a marker. This is Christy.
Oh, sorry, I started talking and realized I had my mute on. This is Nancy. Yeah, I think as long as you have costs that are covered under the covered costs to apply for the loan, which is going to be payroll costs, mortgage interest, rent, or utilities, then absolutely, I think you would qualify for that loan.
I'm wondering too, if I know we've had some questions on maybe a re-explanation of the PPP loan. One question was that their understanding of the maximum loan is 2.5 times the average monthly salary paid over the previous 12 months. Somebody understood it potentially as 2.5 times the annual salary. Can you confirm which one that is?
It is the average monthly salary. You have to use an annual, you have to look at your annual as a base. So you're going to take your annual and you're going to divide it by 12 to get your average monthly.
And I'm just going to, comment here that, you can calculate it any way you want, but SBA is going to come in their SOP and tell you exactly how to calculate it. And they're probably going to have a format that they want to see it, is my guess, if they follow suit to the way they typically operate.
Okay, there are also some questions about applying for both types of loans. So one question was, I already applied for the EIDL with the understanding that I could also apply for the PPP loan and it would be tied into the PPP loan. If I can't have both, how would I back out of the EIDL loan?
This is one area that we really need some clarification on. I am seeing conflicting answers on both of those. In talking to some bankers also, it sounds like as long as you don't accept the EIDL loan, I know that you have 60 days from the time they tell you you qualify for the loan to accept the funds. My thought is go ahead and apply for the loan. By the time they get back to you and say, these are the funds that we're willing to loan you, then we'll have a little bit more clarification on that. But at this point, that is one of the things that we're just not 100% sure about.
One thought on that is that the use of the money, similar to the credits, can't be double dipping. So whatever you declare as the use of the proceeds when it's dispersed, it has to be separated. And again, that will be clear when the SOP is out. Then you'll be able to get the black and white.
That's a great point.
Okay.
So I agree with Nancy's point to apply. It's going to take time for those applications to get processed. And I think, there's going to be more than one reason to apply, correct? Not just to cover payroll expenses?
Yes, that's correct. You know, the other thing that I want to point out to everyone is you do have to certify that you've suffered an economic loss for this PPP loan. And I've heard a lot of people concerned about that, especially if they're continuing to work. And maybe they're one of the essential businesses and they're continuing to work. Again, we're going to need some more guidance from the SBA, but I think as we look at how the landscape has changed right now for all businesses, I really think that almost every company right now can say that they have suffered some type of an economic loss. You know, employees working from home, restaurants with carry out only. I really think that this should not be something that people are getting hung up on, because I think that this is gonna impact or has impacted almost every business already.
Okay, I know many of the people on the webinar today are involved with or owners of S corporations. One question was, do you expect the owner of an S corp will need to complete a personal financial statement for the PPP loan?
Yes. There are some known forms already, but that's definitely going to be one, whether or not they provide a personal guarantee.
Thank you. Other related questions, again, many of these businesses have several different companies associated with them. Would we have to apply for separate loans for each company? We have 3 companies that have common owners.
I know I have that same question, so I think we're going to have to wait.
And I do think one thing is, are they paid under a common paymaster for wages, or do they actually have separate wages? You know, if they're basing this on payroll, that might be something that might clarify it for us. But as Christy said, I think once we see the application, we're going to have a little bit more guidance.
Do you include fees to independent contractors in the salary calculation for the PPP loan? If so, would independent contractor fees be forgiven if paid during the 8-week period after the loan is approved, if paid out during that time?
That's a great question. And this is where I want to tell you what our interpretation of this is. So we have just very, very recently gotten some guidance that independent contractors are included in the calculation if they would have been considered employees. Now, I think everybody was scratching their head a little bit. What does that mean if they would have been considered employees? And it also states if they did not perform a service. Well, I think we issue 1099s to individuals who do perform a service. So I think with that said, we've gone through and we believe that what that means is if you paid an independent contractor that is an individual that works for you, that they would be part of the calculation. However, if you paid a business to perform a service and issued them a 1099, that would not qualify. And again, this is our interpretation of it, and I think there will be more to follow.
Okay, another question that came through was, how does the SBA decide which lending institutions will get the loans? Is it dependent on their past experiences with SBA? We're working with 2 lending institutions and trying to decide between the 2.
Christy, that sounds like a question for you.
Honestly, SBA, I don't think really cares much as long as your application packet is complete and meets their eligibility criteria. If I were a business owner, I would look at the 2 lending institutions and say, how does their approval process normally work? Do they usually deliver on time? Are they knowledgeable in SBA deals? And I'm not talking about an SBA shop. I'm talking about you know, what they're willing to do for you as you move through that process. Because we're not all cut the same. It's not everybody's bread and butter. So the person on the other side of the table should be someone that you communicate easily with, and that you are confident in their path for following an approval process and getting deals closed for you. And if they're both good, that's fantastic, because we have lots of clients that have multi-bank relationships, and we have a lot of great competition out there. So you're lucky if you've got two options that you would trust either or.
Okay, many more questions coming through, but as we're about out of time, I wanted to throw one more question out to the panelists. I think this is a good open-ended one to finish on. Can you touch on the pros and cons of layoffs or furloughs now versus ensuring all or most are rehired by June 30th as it relates to loan forgiveness for the PPP?
Well, this is Nancy. My comment would be, if you can afford to pay the employees now, pay them. This is free money. And again, I go back to the entire intent of this particular loan program is to get money in the hands of employees and small businesses. And so to the extent that you can pay them and you're going to be reimbursed for that money, I would absolutely consider bringing those employees back. It's only going to help our economy.
Okay, with that, I'd like to thank Eric, Dan, Nancy, and Christy. As we wrap up here, I'd like to let you all know that SVA has created a resource page where the recording of this webinar will be located, as well as additional information and updates on COVID-19. Bookmark svaccountants.com/COVID-19 as a resource for you and your business. Before I let you all go, I'd like to remind you that the SVA team is only a phone call or email away, so reach out to your SVA professional as questions arise. If you're not currently an SVA client, please feel free to contact me, Lee Schwartz, so I can understand how we can help, and I will connect you to the right SVA professional and get answers to your needed questions. And looking at the chat function here, there are a lot of questions, so we will do our best to answer them all. Our next webinar is scheduled for this Thursday, April 2nd at 1:00 p.m., and we'll cover remote working now and future state. Next week at this same time, we'll cover Money Talks, options available for businesses now. Registration is currently available on our website for the Thursday one. Registration for the one on Tuesday will be available starting tomorrow. Thank you again for joining us today.